Welcome back. This morning, the SGX Nifty is indicating a start in the red, but that's also because global markets have been slightly under pressure on Friday. Most markets, the US markets closed in the red. Also, you had FI selling in the cash market after 16 days of buying. So markets have cooled off a little bit, but plenty of stocks to talk about. So let's get straight to that. JSW Steel is the first one that we're looking at this morning. Nigel, why are you watching that?
Well, the numbers looked very, very good, actually, Sonia. Much better than what our poll drops. On the top line, the EBITDA as well as the profitability, the numbers were much better. What are the key reasons? The standalone business, that's the India operations. Out there, you had the EBITDA per ton came in closer to around 11,000 rupees per ton. That compares with an estimate of early 10,000 odd. So that was a beat. But the bigger beat came in from their subsidiaries. And if you're just looking at it, Bhushan Power and Steel, JSW Steel coated products, take a look at the swing on a sequential basis. Big improvement out there. On their US operations, Baytown, well, good EBITDA number out there. And on their Ohio facility, well, the losses have come down. Not just that, on the European business as well, the EBITDA per quarter now has moved to more than 10 to around $15 million, and they expect that to sustain. So good news out there. Net debt as well came down because they've released some working capital as they had promised in the previous quarter. The only risk, though, is that steel prices continue to remain soft, and coking coal cost will be higher in the first quarter in comparison to last quarter. So there'll be some bit of a pullback in terms of EBITDA per ton, expecting it to open up in the green. And remember, you can catch the management of JSW Steel at around 9:30 a.m. today on Bazaar itself. Mr. Jayant Acharya will be joining in.
Okay, well, that's the JSW Steel management coming up on the program. Well, NTPC is the next one in focus. Vivek has got details and numbers. Vivek, hi, morning.
Well, good morning. It's a slightly mixed set as far as NTPC is concerned. However, profits managed to beat our expectations. Now, very important development. Street was eagerly awaiting, what the management would say in terms of a stake sale as far as its renewable energy arm is concerned. So, what the management said in the conference call was that at this point of time, once again, they are looking at either an IPO or a stake sale. So, that is not off the table. However, the management missed its earlier guidance of consummating this particular sale by the end of FY23. Now, talking about the numbers itself, revenues up almost 20.5%, EBITDA up 3.7%, and profitability was flat on a year-on-year basis. Our profitability managed to beat our expectations. In terms of the guidance that the company has given, now what we are looking at is capacity addition in the thermal arm. For FY24, 4.6 gigawatt is what the company is targeting. And, as far as the renewable energy capacity addition is concerned, it's a lot more aggressive. Between FY24 to FY26, they're targeting almost 16 gigawatt of addition. Expect some slight green on the stock on the back of the profit beat.
Okay, thanks a lot for that, Vivek. Let's find out what's happening with Divi's Laboratories. Post the numbers. Ekta is here to give us the lowdown. Ekta, good morning.
Thanks for that. Well, for Divi's Labs, I was completely torn in terms of what the stock reaction could be. So I'll just take you through the numbers first. The revenue was in fact better than expectations. The revenue was down 22.5%, came in at 1,950.8 crores. The street was anticipating around 1,863 crores. Margins came in at around 25%. The street was anticipating around 29%. Remember, there's a Q-on-Q recovery which has taken place in terms of margins for Divi's, and that's what the street was anticipating. But it's come in lower than what the street was working with. So 29% is what the street was working with, 25% is what they reported. Profit down 64% year-on-year, 321 crores, estimates were 373 crores. But incrementally, the calls seemed to be positive. The company said, yes, there was no one-off which resulted in the margins declining in the first half of FY23, but they do expect gross margins to recover. They expect Q-on-Q, or they have seen Q-on-Q growth in their key segments such as custom synthesis as well as generic API. And the company has also said there are 2 custom synthesis projects which should come on stream in the next couple of quarters. So it seems as though there is some recovery which is taking place in the business, and that's the reason that I'm going with green. Elara has a sell with a target price of 1980, but Jefferies as well as HSBC both have upgraded Divi's. Jefferies all the way to buy from underperform, and HSBC to hold from reduce. So I'm assuming that the momentum could be on the upside today.
All right, Ekta, thanks very much for that. Divi's, as Ekta said, she's going with green, but as she herself said, we'll see. 3098 is the close on Friday. BEL and Power Grid are the other numbers. Going back to Vivek. Vivek, tell us more.
Well, that's right. So Bharat Electronics, at the end of 9 months of FY23, analysts were concerned about whether the management would be able to meet its guidance. But a very strong Q4 execution has actually ensured that the company has managed to meet all of the guidance that it had given for FY23. Now, talking about the numbers were a beat to as far as street estimates were concerned. Revenues higher by 2.5%. When you're talking about the EBITDA, up almost 16%. Margins coming in quite strong, over 350 basis points of expansion, and profitability higher by almost 20% on a year-on-year basis. The order book coming in very strong at over 60,690 crore. Implied order inflows thereby coming in closer to the 17,000 crore mark. Now, Nuvama actually has written on the results. What they're saying is that the margin expansion has come from a couple of factors, that is input cost cooling, ease in supply chain of critical components, as well as better product mix that the company enjoyed in Q4. Now, coming to Power Grid, the company delivered a strong set of numbers. It's a clean beat as far as our poll is concerned. Revenues higher by almost 15%, profitability higher by 4%. And when you're talking about the margins too coming in very strong at 89%. However, there was one setback. The consultancy business actually saw an EBIT loss this time around, and analysts, are waiting for some explanation from management when the analyst call happens today. Morgan Stanley says that, the profitability has actually beat expectations on the back of multiple one-off factors, including lower depreciation, lower income, as well as higher other income and lower tax rate. Interesting to see how, these stocks will perform today.
Okay, all right. Thanks a lot for that, Vivek. Well, let's hop across back to Ekta to tell us about Glenmark Pharma. Ekta?
Thanks for that. Well, Glenmark, the numbers were largely in line with estimates. The revenue was up around 12%. Street was anticipating 11% growth. US sales were $104 million versus estimates of around $100 million. India was weak, but that was on account of a high base. Rest of the world was up 25%. Europe was up 22%. Margins 18% versus estimates of around 18.4%. But there was a loss this quarter on account of a one-off settlement with regards to Zetia generic, one of their key drugs. Also, the stock is close to a 52-week high, so we've seen a strong run-up for Glenmark. And what might deter the street is that the gross debt is higher this quarter on a Q-on-Q basis. It's coming at around 4,347 crores versus 3,670 crores on a year-on-year basis. So there could be some amount of negativity on account of that, as well as the fact that the numbers were largely in line. There was no real big positive surprise which came through. Call is at 9:30 a.m. All eyes will be on that.
Okay, Ekta, thanks a lot for that. Well, let's go across to Mangalam to find out how Zomato's numbers looked. Mangalam, a decent showing this time, and you're also tracking delivery?
That's correct. So for both Zomato as well as delivery, the underlying theme is operational improvement. However, that comes at the cost of growth as well. But better for Zomato than delivery. Let's start with Zomato. What's weak is basically the gross order value food business. The core business has seen a decline of about 1.5% quarter on quarter. Food revenues grew just by about 2% and monthly transacting customers also fell by 4.5%. The company attributes this to them moving out of geographies which weren't profitable for them. But for the entire year, their average order value as well grew just 2.2%. However, all of this meant better operational performance. The food EBIT margins at 7%, the highest ever. Blinkit revenue grew by about 21%. Blinkit losses also narrowed. In fact, the company said as of March 2023, 65% of the Blinkit orders came in from stores which were contribution positive. In fact, that's not all what the management said. They said that they are targeting positive adjusted EBITDA and net profit, including Blinkit, in the next 4 quarters. They will do that by reducing losses in Blinkit and increasing the profitability in the food business. So the street should like that, see some green on Zomato. As far as delivery is concerned, while the operational performance was positive, that came on the back of them reducing some costs like other expenses and freight costs as a percentage of sales as well. They've posted an EBITDA of 13.4 crores versus a loss of 73 crores the same time last quarter. The revenue growth has just been about 2%. And secondly, the company has gone ahead and made an acquisition, a small one, 25 crores for 10% stake in a SaaS player for omni-channel retailing. So let's see how that goes about.
All right, and we have the management of delivery join us a little later to talk about that. Mangalam, thanks very much for that. More numbers coming through. So Bandhan reported earnings, Muthoot reported numbers. Abhishek is standing by with implications and the read-through. Abhishek.
Well, Prashant, to begin with Muthoot Finance, the gold loan momentum is back over there, seeing a sequential loan growth of 8.9% in the gold portfolio, which has aided the overall AUM growth to be around 9.5% quarter on quarter. The Belstar MFI, their gross NPA ratio has declined by 497 basis points, which is heartening to see. It's now down to 2.43% when compared to 7.4% in the previous quarter. The home finance, their AUM growth was weak despite the fact that disbursements growth was strong. Revenue and PAT over there also declined YOY and quarter-on-quarter. So in overall, the net interest margin has expanded both YOY and quarter-on-quarter. Net interest income growth is about 7.7% YOY and about 8.7% sequentially. PAT growth is almost flat on a sequential basis and down about 6%. Bandhan Bank, they have given FY24 guidance as well. The loan growth is about 20% is what they expect, with MFI loan growth of about 17 to 18% and home loan growth of about 22 to 25%. They are targeting a CASA of 40% and net interest margin anywhere between 7 to 7.5%. Credit cost will be around 2% and ROA and ROE is targeted around 2.6, 2.8% for ROA and ROE of about 18 to 20%. Coming on to the Q4 results, the gross NPA ratio is down sharply to about 4.87% when compared to 7.15% in the previous quarter. Net interest margin has expanded on a sequential basis. Operating profits are down. However, lower provisions have ensured that they remain their profit growth quarter on quarter was strong. Back to you.
All right, thanks a lot, Abhishek, for that. Let's do a quick recap in case you missed out on any of them. Stocks with positive news flow today: JSW Steel, very good numbers; NTPC, Power Grid, Muthoot Finance, Bandhan Bank, Bharat Electronics, stellar set of numbers this time; Zomato and Divi Labs. While stocks with negative news flow, there's Glenmark Pharma and Delivery. But